Well, hi, everybody. My name is Brian Kilcourse, and I'm one of the two managing partners from RSR Research you have on the call with you today. My other partner is Steve Rowen, and what we're going to be doing is sharing the results of a benchmark we did earlier this year on the state of the supply chain in retail. This turns out to be a real timely report because of the nature of the tariffs that President Trump imposed on just about every trading partner on the planet, which of course threw the supply chains into a bit of chaos. So this was a measurement we took right before that happened, as it turns out, and this provides a useful benchmark, if you will, for everything that's going to go forward as it relates to the supply chain. I want to thank our sponsor, Envista, who is a solution provider, and of course our partner, IORMA. So without further ado, let's get into this. Steve? First of all, I want to tell you a little bit about RSR. We use a methodology that we call the BOOT, which means this. It means business challenges, opportunities, organizational inhibitors, and technology enablers. And it's a proprietary methodology that we developed almost 20 years ago to allow us to identify the use cases that drive the adoption of technology in retail. And of course, that means there's a bias. And the bias is that the difference between overperformers that we call retail winners and everybody else is in how they use the information asset. And you'll see that this bias is reinforced in a lot of the findings in this particular study as it is in just about everything we do. But what we wanted to set out to do is we wanted to get a detailed snapshot of the retail supply chain in the end of 2024 and the beginning of 2025. We didn't know, as the world, neither did the world, anybody knew that we were going to get sweeping tariffs imposed by the United States. So we were expecting to see an industry that was fairly stable and looking forward to a year of predictable growth. I guess we can all laugh there now. If we have growth, it's going to be completely unpredictable. But we drew responses from over 100 retail executives, and we wanted to explore how they're preparing their companies to withstand future volatility, which turned out to be very timely. The reason this was so important at the end of 2024 and the beginning of 2025 was because we had just gone through several years of real volatility, and retailers had responded to that by adding new technologies into their supply chain to enable greater agility. So we wanted to see how far they had gotten in that effort. So on to the next one, Steve. Very quickly, these are our survey respondents. There were 111 retailers. They were all, the vast majority were business executives. They come from these four verticals, what we call fast-moving consumer goods, which would be convenience stores, food and drug stores, health products, and of course, grocery stores. The second one is fashion and specialty. Third one is hard goods, which you might think of as consumer electronics, home decor, home improvement, and automotive. And finally, general merchandisers. These are the big box stores. We had a very nice spread in revenue in US dollars. You can see that. But the sweet spot for us is really retailers with greater than the equivalent of $250 million in annual revenue, and really best for those over $500 million in US dollars in annual revenue. So you can see we had a nice spread there. And then by performance, we had about half were average and underperformers, and about half were better than average performers. So this gave us a nice view of the industry. These retailers operated around the globe, most predominantly in the United States, but you can see we had a fairly good representation in the UK and Europe, which we're very happy to see, and in Canada as well. So this was a very timely report because it happened right before Mr. Trump announced all of his tariffs. Let's take a look at what we found, Steve. First of all, there was a big transition going on. We started this study with the supposition that retailers were pretty confident that they had managed to get their supply chains back in sync with the cadences of consumer demand. As we all remember, 2023 was really a rough year. There was that bullwhip effect from not having enough product and too much demand coming out of COVID. So retailers tend to overbuy, and there was a lot of product sitting on the water, ports clogged up, and all kinds of issues happening in the supply chain. But by the end of 2024, retailers were very confident that they had overcome these issues and they once again had achieved balance. They really pinned their hopes for 2025 on a continuing strong economy, consumer confidence, relatively low unemployment, and healthy sales as a result. Many companies were in the process of making technology improvements and the operational changes that go along with those to improve agility and resilience in their supply chain. We'll talk a lot about this. As we all know, however, 2025 has brought back volatility in a big way, and as I said already, largely as a result of the imposition of tariffs by the United States. So things are up in the air. And the question now for us all is, did retailers get enough done to modernize our supply chains to be able to roll with the punches as they keep happening in 2025 and beyond? And we'll take a look at what they have to say. Okay. Here are some of the key learnings. Steve, you can chime in on this too, but we try to summarize the entire report in one slide if we possibly can, and this was our attempt. The top business challenge for retailers was that suppliers don't have knowledge of the markets that they serve. This is fascinating because what we can see in the data is that retailers, in fact, are moving faster. Their supply chains are much more nimble than they used to be, and they're localizing their offer to consumers in ways that they couldn't do before. But that starts to put pressure on suppliers to understand the markets as well as retailers have over the years, and retailers are complaining that they're not keeping up. So that's the whole issue of collaboration becomes a big one for retailers, and it's their number one concern. They do worry that positioning themselves to be able to respond to dynamic demand might impact their ability to buy big. And of course, this is the strategy that retail winners employed since the late 1980s to lower the unit cost of goods and deliver those lower costs in the form of lower prices to consumers. They did that by, of course, standardizing their assortment and offering really limited choices to consumers. We've written for years that for a long time, it wasn't about what consumers wanted to buy. It was about what retailers want to sold. That power dynamic is completely flipped around. It's nowadays what consumers want to buy, not what retailers want to sell. And this challenges their buy big strategy. And that in turn creates pressure on price dynamics, and consumers are paying very close attention to that. Retailers very clearly assign high value to improving forecasting to be able to develop multiple demand generation scenarios. And we all know that, of course, this is enabled by two things: big data, all kinds of non-transactional data that is available to retailers, and AI to sift through it all. More winners than non-winners are focused on demand forecasting as the key enabler for a more agile supply chain. And winners are clearly regarding this capability as foundational. Lack of supply chain visibility, of course, that was the question we had at the beginning of the study. How visible are the supply chains? But lack of that visibility and an overdependence on suppliers who, remember, they said they don't have the same knowledge of the markets that they serve that they would like them to manage disruptions within the supply chain, and of course, legacy technology are the top inhibitors enabling more progress. And finally, more than a third of retailers say that their supply chains are currently in a state where they can monitor and react to supply chain events in real time. And that sounds like great news. Remember that means that almost 2/3 of retailers do not say that. and that, of course, is the big challenge.
Right. And, it's probably worth repeating. The timing of this study is so unique. I don't know if it's a factor of us just running so many surveys, but Brian and I were in a very similar position right before the COVID outbreak. We happenstance, again, we run a lot of surveys, so I guess it's just a case of rather being lucky and prolific than good. But we ran a survey at that time asking retailers what their plans were for click and collect or buy online and pick up in store. And at that time, they told us it'll be nice to have someday. You fast forward 30 days from when we collected that data, and all of a sudden it became a must-have to stay in business. What this data is really showing us is where retailers were before everything kind of got thrown into a blender as far as what are tariffs going to do to global trade? Are there going to be long-standing trade wars? Are they going to be on some products, not on others? On some product segments, not on others? How are grocers going to make sure that the people in this particular country who are working in the fields to get the produce to the shelf are now afraid to actually come to work because they're afraid they're going to be deported. There's chaos everywhere. So what we really think when we look at this data is this is what could have been. And Brian said to me the biggest mouthful possible, which was, how much work did retailers do to get their houses in order? The buying big point on this data point, number 2, we see that every day when we go shopping. We can see which retailers at the early days of, Liberation Day in this country, when it was announced that it would be 50% tariffs on steel one day and then not on another, and 100% tariffs on certain countries and then not the next day, that went in on it. They're overstocked. We go to other retailers who said maybe this will all blow over. They're completely understocked. So there is true chaos in the world right now. And what this data shows us is who is going to be able to survive this fast. The spoiler is it's the largest retailers, those who have the most might to lean on their trading partners. They are probably going to fare the most well through this. But that data will shake out as we go through. It's a very tough time to be a small to mid-sized retailer. That is for sure.
Yeah, it's a good summarization. And what we're going to do now is we're going to get into some of the data that supports those summarizations. The first thing we like to ask retailers, what is the value of various processes? And we ask retailers to rank high value, some value, or little or no value. And we tend to pay most attention, of course, to the high value items. Some value, retailers who answer in that way are being a little bit wishy-washy or hedging their bets. So we focus on the ones who they feel most strongly about. And very clearly, being able to see and respond to disruptions in real time is a number one valuable process. And right next to it is to be able to monitor your capacity and to add more when market conditions demand it. So, this is all telling a very similar tale. They want to be able to see and they want to be able to respond in time to affect their performance in the marketplace before they get to the end of the selling period. They want to be able to determine the optimal number of facilities and locations. That's a forever issue. Model contingency plans for severe supply chain shocks or interruptions. We saw that earlier when I said that retail winners are much more interested in being able to model various scenarios to prepare themselves and to position their assets properly. And on down the line. But you can see that there's a very clear trend here. It's all about, number one, being able to see in something approaching real time, and number two, to be able to react in time to affect a positive outcome in the selling season. And longer term, to be able to use what they see in the demand side and on the supply side to put the capacity where it needs to be. So it's very interesting. Now, remember our boot methodology. We like to start with something we call the business challenges. And for those of you who aren't really aware of RSR's way of doing business, these are the external pressure points that cause retailers to want to move, to want to implement the technology. And the number one business challenge is that the world has become a very unpredictable place. Let's take a look at what that means. At the top of 2025, the top concerns were really focused on supplier market knowledge. We've already seen that a couple of times, complex logistics, and geopolitical instability. Retailers were focused on actionable improvements, what I just said in the summarization. They want to especially improve collaboration and improve their speed to volume. And others, average and underperformers, are really wrestling with structural issues and reactive planning. So you can see what's happening here. Winners are winning because they can predict what's likely to occur based on scenario planning, using the latest in analytics and positioning their assets accordingly, where average and underperformers are basically responding to shocks in the marketplace.
Yeah, we saw that in 2022. We ran a KPIs report. It was something we'd never done before. And the top finding from that report was that the better the retailer, the more engaged or the more interested they were in finding out about what if and scenario planning across all aspects of their business. Right. Supply chain, merchandising, they even wanted to do it with promotion and pricing. That ability to sort of plan what if is a direct result, as Brian said earlier, of the instability that they sort of got slapped with during COVID and thought, this might not be the last of these really industry-shaking disruptions to come along in the next couple months or years. And the better performers have a much greater understanding of that and have been setting up their houses since then to be able to react to sort of not predict exactly what's going to happen, but set up scenario planning to be in a better position to react more quickly and not just be taken completely off guard.
That's right. And here's a little bout to Pink Floyd. Wish you were here. That was for our friends at IORMA. We're big Pink Floyd fans on this side. Anyway, the top challenge for retailers, as I've mentioned already, is better collaboration is needed between the trading partners. What's interesting about this is we get a chance to see how this has changed over the years. And if you look at the last 5 years, you can see that retailers have become more concerned about this, not less. That doesn't mean that they're not collaborating. It does mean that the speed of the market has increased dramatically. And so retailers really need for their partners to step up and to actively collaborate with them. Now, we could talk a lot about what that means. We actually have another report that is coming out in the next week, I believe, that talks specifically to the issue of collaboration between CPG companies, consumer products, goods companies, and retailers. Please be sure to check our website for that report when it comes out. But retailers are really concerned about it. 34% of retailers in this particular study strongly agree that our suppliers don't have knowledge of the markets we serve, and that is a huge stumbling block for them.
Yeah, one of the things we find in that report that's coming out in just about a week is there is a healthy distrust between retailers and their suppliers as it comes to this exact thing. Retailers believe that the information they've been collecting about customers for the last few decades is theirs and theirs alone. And that if they share it with their supplying partners, all those supply partners are going to do is try to work around them and sell direct to consumer. And vice versa, on the other side of the coin, for the information that suppliers have been able to collect about the products that they manufacture, they don't really feel like sharing it with retailers because they think if we do, all retailers are going to do is develop more private label brands of their own and cut around us. What we stress heavily in that report is it's time to get past some of that thinking, because yes, there will be a measure of, using data to your own strategic advantage. But the truth of the matter is, as it stands right now, consumers are increasingly becoming frustrated with the products available to them, the promotions that are available to them, the availability of those products, the promises they'll be in one channel when they're not there. All of that is sort of mounting to create this more frustrated customer. So the more collaboration that can happen between trading partners, the better. It's one of our recommendations that we have in that report is time to get over this and start, sharing across the aisle a little bit more.
It's very true. Now, that's a summarization of the external challenge. The external challenge, of course, is the market is moving very quickly. Supply is unpredictable. Demand is unpredictable. And we can't have a hands-off relationship with our trading partners. We must collaborate actively with them, as Steve just mentioned. There are some internal challenges, which we call operational challenges. Now, I need to distinguish in our particular methodology, there is a difference between an operational challenge and an organizational inhibitor. An operational challenge is something that causes retailers some agony. They have to manage around it, but they can still function. An organizational inhibitor is something that stops them in their tracks, and we'll talk about that a little bit later. But these are some of the operational challenges that retailers are really concerned about, and you can see that there's a big difference of opinion between retail winners and everybody else. Retail winners are most concerned about securing the availability of supply. I'm actually surprised that it's only 49%. But remember, this is a top 3 question. So if we have a response that's greater than 33%, we start paying attention to it. We only allow them to say with 3 things, not 2, not 5. They have to answer 3. So securing availability of supply is a top challenge for most of those retail winners. And short-term supply chain volatility is preventing them from engaging in long-term strategies. Those are the 2 things that retail winners are most concerned about. Look at the bottom of the chart. Overwhelmingly, average and underperformers are worried about the insufficient days of supply within the supply chain. And remember what we said earlier, to summarize, a difference between a winner and everybody else is that winners have used predictive modeling, scenario planning to prepare themselves for the unexpected, whereas average and underperformers have not. And therefore, they're just waiting to be shocked. And when they receive that shock, what do they find out? They find out that they don't have enough inventory in the supply chain to deal with the change. Overperforming retailers, retail winners are really attuned to customer care abouts. And this, again, is consistent with just about every study that RSR has ever conducted. Remember, we were talking about this whole issue about the unit cost of goods. And retailers are concerned about their ability to buy big and keep that unit cost of goods low so that they can pass some of that on to consumers. Well, between that, the localization, the volatility in the supply chain, and the effect of tariffs on retail price, retail winners are really concerned about how consumers are going to respond to what will inevitably be perceived as a price increase. But the one thing they know is that they cannot cover supply chain inefficiencies by raising prices. So they strongly agree with that supposition, whereas less than half of average and underperformers do. That's probably why they're average and underperformers. The other thing that retail winners are very concerned about is we have to find more sustainable practices and products that satisfy changing consumer tastes. Because in spite of all the economic volatility, consumer tastes are still getting much, much more invested in sustainable products, healthy products, things that you put on your body and in your mouth. Consumers are very concerned about those things, and as the age of consumers shifts towards a younger spending public, those concerns only keep going up. So retail winners are more aware of that than average and underperformers.
And it probably bears repeating for anyone just joining now that a retail winner is not some arbitrary term that we've devised here at RSR. It's a stat-based. So retail winners, our definition of retail winners is really straightforward. These are retailers who are outperforming the average in sales in comparable channels. So if their same year store sales by comparison, their same year, our year over year e-commerce sales by comparison are beating a certain metric, they become a winner. Anything else, they become average. Anything below that, they become a laggard. We combine the average and the laggards together to form all others. Because our findings, and we've been doing this for 18 years now, the retail winners don't just do the same things better than everybody else. They tend to do very different things. And this is a perfect example of that. They recognize that if they have an enormous bill coming to them from their supplier, they can't just turn around and say to their consumer, okay, now you pay for it. An average or an underperforming retailer might be much more inclined to do that very thing. So just worth calling out that it's a real stat. It's not something that we've just sort of picked out of thin air.
Good. So how do these result in challenges on the operational side? This is the question that you might have. And guess what? We see another difference of opinion between retail winners and everybody else. Retail winners are more keenly aware that rapid changes in consumer demand can undercut their ability to buy big. They're the ones that are really concerned about that. And they remain concerned about matching supply and demand when both have these dramatically changing characteristics. Underperformers, average and underperformers are still worried about offering new order and fulfillment capabilities without undermining the profitability. And they worry more about their ability to simulate demand or supply scenarios because they're not doing it very well. We already saw that in the data. The offering new order and fulfillment capabilities without undermining profitability is really a holdover to the COVID years, whereas, as we all know, retailers of all stripes offered click and collect and various capabilities. Some have done it well, some have done it poorly, but they all tried it. And what we're seeing is a tremendous amount of modernization to lower the cost to serve those kinds of multi-channel orders. And that continues to this day. Now, these challenges turn into opportunities. And I like this picture because this person needs to stay balanced.
There are dire consequences if they don't.
There are dire consequences if they don't. This happens to be a picture from my state of California, and that's probably some horribly scary place. This person needs to stay on the wire. So on one side is volatile demand, and the other side of it is volatile supply. And retailers need to keep that somehow in balance. And what we're going to see in this data is that retail winners, the overperformers, are better at doing that than average and underperformers are. At the beginning of 2025, retailers prioritized this. And remember, this is before tariffs. So retailers are focusing on product quality, health impact, and sustainability more than they were on geographic sourcing. And we expect that to be completely flipped the next time we run this story. Because we do. But retailers really were focusing on differentiating in a highly commoditized market with better quality, more healthful lifestyle choices, and sustainability. That was all to the better. That was all good. Those discussions had been a little bit upended over the geographic uncertainty of their supply, and we expect that is going to continue. Agile fulfillment with top goals including localized forecasting, real-time inventory visibility, and minimizing excessive stock were big issues in the beginning of 2025. They remain big issues today. Retail winners have placed significantly more emphasis on sustainability and value-added product attributes like I mentioned, quality, impact your healthy lifestyle, and sustainability that average and underperformers did. And they saw that as an important way to differentiate themselves from price-only competitors.
Yeah. We've got some data coming in a different survey that we have where we ask, how important is where a product was made? What about the health situation of the person who was making it? What about the conditions of the environment around it? Becoming much less of an issue. And it's, can you get me this product? Can you get it to me right now? Can I sell it? So we expect when we run this survey next year, as Brian said, we're going to have a completely different view of the world.
It's worth talking about because, our partners at IORMA are probably interested in this too. We viewed those discussions as very, as good, as positive, as forward moving, focusing on the environment, focusing on health, focusing on those things were ways that we saw retailers could differentiate in a good way from their price and availability competitors. One of the things that's undercovered, in our opinion, in the popular press, is what impact all this tariff stuff has had on that agenda. It's something we want to study, and I'll bet you the folks at IORMA are going to be interested in it as well, because it affects everything across the globe. But that's the end of that editorialization. I'll go on to our date.
We could go pretty deep on that if we needed to. It's a Jones of ours. I mean, we've been conducting environmental sustainability surveys since 2008. I mean, to give you an idea, we launched our company in 2007, and within a year, we said, this is an area we want to find out how serious this is for retailers, how much they think they can differentiate in this field. We were, spoiler alert, we were disappointed to find out how little it mattered at that time. But we've touched base on it over the years, 2012, 2015. I think the last we did was probably in 2018. And what we've done instead is work it into surveys like this, into our merchandising survey, into our supply chain survey, to try to find out who is carving out space here. And sadly, when there is so much turmoil about where products can come from, and there's this mad dash to try to bring it closer or try to find another factory or just try to find another source in general for raw materials, that is likely, and we can't exactly see the future, but we've been doing this long enough to make a few, educated guesses. That is likely to go by the wayside, and that is tremendously unfortunate. So, let's move.
So this reinforces some of the things we summarized earlier, that you can see that retail winners are much, much more interested in this notion that we call agility and resilience than average and underperformers are. And what does that mean to them? Well, they think it means alerts on unexpected supply chain shortages that could impact the supplier's ability to meet performance targets. It means much better demand forecasting. You can see that winners clearly see that as an important capability. Alerts on critical inventory situations anywhere within that supply chain, and to the ability to identify bottlenecks. The one thing that retailers told us, and you can see this in the data, is that they felt comfortable than before that they could at least identify where the bottlenecks were. The difference between winners and everybody else is they want to be able to predict where those bottlenecks might happen so that they can manage around them in the season. What do they hope to gain from this? This is another top 3 question. And we summarize this for all respondents in this particular case because there was a great deal of agreement. And again, remember these top 3 questions, if we see something that's over 33%, we start to pay real close attention to it. So in this case, let's look at the top 2 and maybe the top 3. Number 1 is they want to improve inventory productivity. And that really is what about supply chain agility is all about. Retailers want to be able to deliver much higher service levels to consumers with much lower overall inventory investments. And that means localization to some extent. It also means much more frequent allocations and replenishments, those kinds of things, a much faster moving supply chain in the past, so that they get the inventory where it's most likely to sell at full markup, and they have less of it left over at the end of season. They want to be able to remove supply chain bottlenecks by increasing capacity. That's a forever challenge for supply chain planners. And number three, they want to be able to reduce waste and shrink throughout the supply chain, of course, because that also improves inventory productivity. So all of these things are basically working in sync with each other, and no surprises here, except that the opinions are pretty strongly held. Now I'm going to turn the microphone over to my partner, Steve, who's been the color commentator. Now I'm going to become the color commentator.
Now you get to be Tony Rowen.
All right.
Probably a reference that's not going to play with this audience, but so Brian mentioned at the top of the call that we follow the same methodology with all our research, and we have since our inception. And the thing that tends to get in the way is the organizational inhibitors. As you might imagine, once we've exposed the external business challenges and then ask retailers where are the opportunities, they get kind of lit up. Oh, these are all the things that we could do in this one particular area of study. Then the rubber meets the road, and it's like, well, what's stopping you from taking advantage of all these wonderful opportunities that you've just identified? And as you might imagine, a lot of times it's a combination of legacy systems and thinking. There have been trends here throughout the years. When we first started, ROI was always the big issue, right? The number one pushback that retailers gave us is, well, the vendor community hasn't shown us there's enough ROI here, so we're not even taking a lot of these technology options that are being, trumpeted out in the marketplace as really seriously. That's gone away. It's worth calling out that a lot of the technologies that are available to retailers to help with their supply chains in particular do exactly what they say they can do. So it's not a case of, a doubting audience that requires more proof of concept. What it is tends to be internal alignment, prioritization in the right places coming from a top-down environment, and by and large, just too many other priorities going on at all times. Brian said the real difference between a winner and a laggard is a winner tries to see around the corner a little bit. A laggard tends to let business happen to them, and we'll see quite a bit of that as we move through these right here. So I'm going to slide that. Go ahead. What are the key internal barriers right now to addressing the challenges and the opportunities that we just saw? 43% of respondents, 4 out of 10, say they have a lack of visibility at key points along the supply chain. We would argue pretty difficult to manage a supply chain if you can't see what's going on at the most important points of that supply chain. So that's a pretty big finding. It doesn't surprise us. It's something we've seen moving along. I don't want to get repetitive here. This was a time when retailers were poised to make real leaps and bounds forward before all this tariff nonsense kicked in. So this is a view of what could have been. Even in that light, there were already fractured legacy systems and siloed operations. You have issues where merchandising doesn't want to talk to marketing. Marketing doesn't know what's going on with supply chain, and on and on. These are just real world issues that anybody who's worked in retail, as myself and my partners all have, knows to be true. And there's limited investment prioritization. Many retailers still see supply chain transformation as costly, and they just don't have the people in the right places trumpeting how much these solutions really could help today. Insufficient visibility is that top inhibitor of progress. So that was the summarization slide we just saw. This is the data that backs it up. We gave retailers a long list. I believe there was maybe 12 to 15 different options they could choose from.
Right.
And so what are the top 3? You can only pick 3 organizational inhibitors that are preventing you from having a more effective supply chain. So the 3 that are highlighted in white right here, these are the ones that bubbled right to the top. We lack key visibility at key points, as we already discussed. Pretty hard to be efficient when you don't know what's happening. Number 2, we depend too heavily on our shippers to manage supply chain disruptions. This is a dance that's been going on year in and year out when we conduct this survey, when we conduct this research, and our legacy systems are too fractured. So it's not painting a pretty picture, even despite the fact that this is before all things went haywire. So if you're in this space, and if you're watching this video, I'm assuming that you're in this space, you're not just casually watching this for fun, it's really hard to have any conversation about what could transform supply chains without the conversation around artificial intelligence and its role in there. We talk at length about AI. The very short version of it is there's a lot of noise out there. If you attend any of the big trade shows wherever you're located, there's a very good chance that AI has been baked into the marketing materials of pretty much everyone in attendance. Our big show here in the US that we go to every year, year in and year out, is the National Retail Federation show in New York in January. And for the last 2, probably 3 years, AI has been the recurring theme that dominates the message of everyone there in attendance who's trying to, win people's attention. You're walking down the aisle, hey, let me tell you how AI can help. It gets a little noisy. It gets a lot noisy. And so what we sought to do with this research is go directly to retailers and find out, what are your plans for AI? What do you really believe is possible here? And probably, most importantly, do you have real budget set aside to explore some of these opportunities? Not to dive in whole hog, but to sort of taste and see what are the real opportunities, what are the real benefits that you can leverage from this, let's face it, groundbreaking technology. So we already talked about how COVID upended our industry, certainly on the supply side, and that ever since then, retailers have been focusing on using every bit of new data available to them and every new analytical tool that's available to them, particularly those that are powered by machine learning and AI, to implement those types of those capabilities. Too many people get caught. Let me back up for a second. I don't think, and this is a Jones that I've been on lately, I don't think enough retailers get enough credit for how quickly they were able to adapt in the face of true adversity during the COVID-19 pandemic. That said, the best of them took away one key lesson, which is the world's not slowing down. Instability is not slowing down. This or something at this scale is going to happen again. Let's learn from it. The more reactive said, well, we got through that. Thank God it's going to be smooth sailing from here on out. So we're much more interested in that former group, those who recognize, okay, this is a real wake-up call. We got caught in a tough situation. What are the tools that are available to us right now to plan out as much of a plan as possible in the face of adversity? And you can't have that conversation without talking about AI, because it runs algorithms and it runs scenario planning in ways that no human being really could, even at this nascent stage right now. If you're a regular user, and we certainly are, all of us use AI in our daily lives at this point, despite all the doom and gloom conversation, we could certainly have that as well. There's real power there. So the key points that retailers are focusing in on are, how can we improve our forecasting? How do we develop multiple different scenarios for what could happen and prepare ourselves in the best way possible to react when and if some of those things should happen? How are we going to optimize an end-to-end product flow? We're seeing this in real time right now. Again, this was Q1 2025 data. Well, by Q2, you better have a pretty good idea of how you can change things up based on your product flow, because there's a very good chance that whatever your product flow was before, it's not a go-to anymore. Number 3 is using predictive models to anticipate some of those disruptions at the individual SKU level and recommend cost-optimized corrective actions. This is a key point, because there are certain areas, we've talked a little bit about prices and what retailers have been able to do. Sometimes they share some of the elevated cost with their supply partners. Sometimes they decide to just eat it because the item is something that is a non-negotiable. It's something that draws a lot of attention from consumers, and they simply will not tolerate a higher price. Sometimes they're just going to try to sneak it in. But you need to be able to look at a SKU level in order to make those decisions in an intelligent way. No one, even the most, politically, I would say, progressive-minded retailer is just blanket raising their costs and expecting people to understand why they're doing that. There was a lot of talk about that in the early days, in April and in May of 2025. We've not seen a lot of that come to fruition. Time-phase product supply chains based on customer demand scenarios. We've talked quite a bit about that. And then probably most importantly, stress test the supply chain to see where those unknown capacity constraints can surface. You don't know what you don't know, and you can't find that out until you start trying to poke holes in your own system. Brian, is there anything I missed in here?
No, it's pretty good. I want to emphasize that the difference between overperformers and everybody else is that overperformers want to be able to predict the most likely scenario to unfold so that they can position their assets accordingly. As you said, average and underperformers are just waiting for that shock to hit them, and then they respond. So there's a really key behavioral difference in between them, and we see this in the data pretty strongly.
So, what do retailers overwhelmingly value? Well, we beat this horse pretty hard, but we'll hit it one more time. Scenario modeling for demand and supply. If we sound repetitive, it's for good reason. This is what separates the wheat from the chaff. This is what the best retailers, the ones who are able to still provide the products that you want, despite this environment of turmoil, is a nice way to put it. That's what they have been preparing for. There's a reason why they're able to do that. They also value predictive analytics. We talked about that. And they haven't ruled out AI as complete noise. They're using these tools. They're looking at these tools and saying, what's really possible there? We've had some behind doors conversations with retailers who are using AI. And the one thing that it's probably worth mentioning is the people in your organization who tend to push back the hardest against AI, when it's all said and done, tend to be the people who get the most benefit out of it. We've had more than one conversation with retailers who thought, we try to get our, associates, or not associates, but if we try to get our employees to start using some of these, more automated tools, they're just going to worry about their own job security. It turns out that those people actually they value much more the simplicity, because they've been trying to cobble together difficult tasks in highly manual ways. So yeah, there's a large gap between perceived value and current adoption. That is no surprise to us whatsoever. Only 40% have implemented any form of AI, and we're talking about the most basic forms of, pilot programs in one particular component. But when asked about their supply chain resilience, over 3/4 say that if they have a digital twin for critical and scenario planning, it will help them prepare for shock absorption. And I think Brian touched on this earlier, only a third so that they can currently monitor and react to supply chain events in real time. That is hardly encouraging for the world that we find ourselves in now since April 2nd, 2025. Again, winners, they lead the way. No surprises there. Over 90% place high value on alerts for inventory shortages and advanced forecasting. They might not have the technologies yet, but they recognize the perceived value at a far greater rate. And that's important, because you can't get there without recognizing where to prioritize your forward motion. So winners see it. This is basically a graphical representation of what we just talked about. Winners have, again, there's only a few retailers, there's only 30-something, 40-something that have had any real meaningful investment in AI so far. But they understand that they're going to have to get there. They have 10-point and 8-point and 5-point gaps in some of these cases. When you go down to the fourth data point, have the ability to leverage external influences like macroeconomic factors like weather. Our friends at IORMA talk a lot about weather. They talk a lot about consumer sentiment. We've seen some really interesting things that John's done around these two issues alone. Demographic trends, another key point. That's a big difference, 61 to 42%. So real difference of perception, real difference of prioritization. This is how they're triaging the future, is probably the simplest way to say it. But they have a long way to go. And this is to be expected. If we had seen these numbers any higher, we probably would have become distrustful and said, are you giving yourself a little more credit than you deserve here? Retailers are nothing but honest with us every time. And part of that is due to our business model, is the fact that we promise never to share their information at a personal level, only in aggregate like this. But the other is they just tend to be inherently, fairly matter-of-fact people. It's an industry that we've come out of, and it's the only industry we serve, and we know it, we love it for this reason. We can rely on the data to be accurate. So not a lot of retailers have been able to improve their forecasting using AI or ML yet. A little bit here and there. Predictive models to anticipate supply chain disruptions a little bit here and there and on down the line. But the truth is, there's value everywhere. And as time moves forward, we expect these blue numbers to tick up quite a bit.
Yeah, this is an interesting slide. If you're a solution provider, you like this slide because this shows you what your market opportunity is. But that this explains, for those of you who are on the buying side of the solution discussion, why so many solutions providers are focusing on a next generation forecasting, because it's such a hot issue for retailers. And there's that big gap between those who are happy with what they've got today and those who perceive a lot of importance.
Yeah. And this is more of the same, right? This is a case of what's important to you. If you We talk in the full report, which is available on our site. It's 30 plus pages. It's 20 plus charts. There's a lot of in-depth analysis around this. This is sort of an overview that we're giving today. But we talk a lot about any supply chain that plant has any intention of being, or any, capability of being future-proof, is going to need to have some resilience built into it. And it's going to need to have quite a bit of agility built into it. And this is a graphical representation of the march towards greater agility. You can see here, retailers have we don't need to explain this to them. We don't need to hold their hand and say, do you think it's important to have faster product life cycles? They're like, yeah, it's very important. We got to get there. Are you there? No, we're not there yet. But again, it's just part of the progress. It's part of the evolution, because retailers for a lot of years, and we wrote about this right up until the pandemic hit, a lot of retailers were kind of happy to say, well, we know there's a lot out there that could help us, but we don't have a real reason to do anything about it just yet. They have a lot of reasons to do things about it. So if you read our stuff, thank you. If you don't, we conclude every report with recommendations. These are not what we consider to be theoretical best practices. This is purely a combination of what we've just learned from that data, from that research that we've just conducted, and we combine it with some of the wisdom that we've picked up along in our own ways along the path, that we feel that we've sort of earned the right to marry the two together for these baseline recommendations. They're very rarely specific to one segment. Every now and then we will do that, but these are for the general reading audience, right? So any retailer who's so inclined to read the report, these are the baseline things that we say to take away from it. And we can just sort of tag team and go back and forth on these. Number one is to acknowledge the chaos. We've spent a lot of time since April talking about how volatility is the new normal. Truth is, anyone who tries to read the tea leaves could have recognized when COVID hit that chaos is going to be the new normal for a lot of reasons. It might be, as we said, weather events. It might be geopolitical things. There could be, shocks to the supply chain based off of any number of unseen unseens. But the truth of the matter is, volatility does seem to be the new normal. And the best retailers are preparing for that in every way possible. That's why our second recommendation is just get on with it. The enemy of good is perfect. Progress doesn't require perfection. Use what's available to you right now. Analyze quickly and act faster. There's a million different ways out in business books. People talk about failing fast or whatnot. The truth of the matter is, the very best retailers are experimenting. They're throwing out traditional thinking. They're experimenting on small scale level to identify areas where they can pick up 1 or 2% efficiency. The moment that they find those, they run with it. It's how incremental progress is made. Brian, I'll toss it over to you for these next two here about predictive.
Sure. Well, it's worth talking about just a little bit more of that second point, because it leads right into the third. The initial response for a lot of retailers when the tariffs were imposed was just throw up their hands and say the plan is out the window. I have no idea what to do. We don't recommend that. As it turns out, as a matter of fact, the new generation of planning tools helps you to be able to respond very, very quickly to changes in either supply or demand if you have them in place. So in our mind, the current situation, the currently volatile marketplace, is the best rationale for investing in these tools that I can think of. It much more stronger than ROI or just the intellectual goodness of the whole thing. There's new data available that will help you to sense changes in demand. There's real time available to help you to sense changes in supply. Could be something as simple as a supply chain disruption, a ship not being able to get into port, or it could be something much more serious. And retailers, if they can see it, they can manage it. And so don't give up on the notion of planning. You may have to give up on the notion of planning in the traditional way. You have to think of planning as a process, not as a project that you do before a selling season. And that leads us to the third point, which you need to do is to trust the predictive tools. And I might add the data. There's a lot of new data that can help retailers to develop much more accurate and timely plans at a store SKU level. These tools are tremendously powerful, and they can do things that I could only dream of when I was a CIO back in the 1990s. They're really great, but they have lots of implications to the organization. So embrace the tools, embrace the changes in the process that these tools enable, and use a trust but verify strategy to make sure that what the tool is telling you to pay attention to is in fact what happens. We've already talked about this extensively, and we'll talk about it again in the coming weeks with the new report that we have coming out, but you need to collaborate aggressively with your partners. And this means a whole change in the way internal teams and external partners are sharing information about both supply and demand. And this is a bigger topic than we have one 5-minute slot to talk about. So we'll save it for later. But shared risk is also shared reward, and it's essential in getting through today's tumultuous times. So I want to tell you just a little bit about us. We've been chatting on and on and on as if you know who we are. We are a very small firm that focuses on the business use cases that drive the adoption of technology in retail. Our perspective is global, but you probably can tell from our accents, we're from America. And so there's that kind of a bias, I guess you would have to say, in our data. We try to present a global perspective, but it's always important to remember where we come from. Nonetheless, we have found that many of the business use cases that drive the adoption of technology in retail are in fact global issues. So what are we trying to do? We're trying to bring those forward and to highlight how the best performers attack those things, turn them into opportunities. We want to identify information that helps retailers and their trading partners build more efficient, profitable business. Very simply. We want to identify the business issues that solutions providers have to address in their solution set. And we provide insight analysis across a whole spectrum of operational issues in the extended retail industry, with the intention that all boats in the harbor rise with the tide. So that means one of the things that means is we don't share individual responses. We aggregate, as you could see in this report, so that the guilty are protected. But the objective is that everybody learns from everybody else's activities and their mistakes. And that's our motto. We stick with it, and we hope you enjoy the reading. I think we have one more page that shows you what the report looks like.
Yeah, this is the full report.
This is what it looks like. Yeah.
Sponsored by our friends at Invista. We want to thank them again.
Yes.
But we've been doing a lot of this research with our friends at IORMA. They're the ones who are hosting this video here today, and they've been a tremendous partner to us. They help us develop some of the inquiry that goes into the survey, and they have insights that they share with us across a whole host of research that they conduct. They put us in touch with interesting people. We have fascinating conversations. We just really value the relationship. So we want to say thanks to IORMA. If you who are watching this have any interest in downloading the free report, there's a couple different ways to get it. You can go to our website. You can go, I believe this link right here is clickable if possible in the recording. I don't know. But if not, rsrresearch.com, and you just look at our recent research and you'll find a whole host of our stuff. It's all free. As Brian said, we really do, it might sound fairly altruistic, but we really do just hope to make the industry a little bit smarter every day and help people make better decisions, put their best foot forward, and do the best they possibly can at their job. So that's why we make everything available for free. So with that, unless there's anything else you want to add, Ryan, I'd just say thanks to our friends at IORMA for this great video series that we put together.
Absolutely. Thank you to IORMA. Thank you for listening. And we really encourage a dialogue. There's nothing you can say to us that would insult us too much. So feel free to reach out to us and talk to us about what you are seeing in the marketplace. What do you think about this report? Where did we get it right? Where do we need to improve? We're always interested in that kind of feedback.
Yeah, and what should we be asking next year that we didn't ask this year? That's always
that's right. And in these volatile times, I wish you all a tremendous amount of luck. Let's get through this. What do you say?